Microsoft just reported earnings and they did have a big money quarter, so much so that the company jumped from $398 to about $458 in just a single day, which that is about 16.37% in the past days, meaning it gained $63 in share price. Now, do keep in mind that this slide deck was made with Gemini. This is not a sponsor, but just in case there are some mistakes, please don't say it in the comments. I tried reading through it before I did the video. Everything seemed okay, and I tried to verify the information, but if I missed something, it is very possible, and I do apologize. But these were the latest earnings from Microsoft. How much money did they actually make? Well, in total sales for the final quarter of 2026, they made $90 billion with a B. That is up 18% from the last year. Pretty much this is all the money that they got from Microsoft, Windows, Xbox Cloud, computing, and subscription services. One thing to note is that they did blow past analyst expectations, so that is one of the reasons why the stock is up so much, even though they're still doing something I really don't like, but we're gonna see that later on in the video. Their net profits was $35.8 billion, which is 31% from the last year. So basically, it's the money they have left over paying all expenses, salaries, and operating costs is pure profit from this $90 billion, which is kind of crazy for one of the biggest company in the stock market. As you can see, Gemini made a little mistake here, but that's okay. I think the slide looks pretty good, and I think we can understand the earnings report. If you're a beginner investor like me trying to learn from a company, I think it can help. That's the whole reason I'm making the video. Now, their cloud revenue, which is one of the most important metrics, reached $59.3 billion, jumping 27% compared to last year. And at Microsoft Azure, I think that's how you pronounce it, I always have trouble with the word, which is their cloud server platform, has surpassed $100 billion in annual revenue. Guys, this is crazy for the first time ever. This means that everybody has concerns of AI, if they're gonna beat it, if they're not, well, they just crossed $100 billion. Now, since there is so much AI demand in the market, there are so many companies renting Microsoft servers to build and run artificial intelligence. And I believe that Microsoft actually created about like 30 or 31 data centers, which is completely ridiculous. That is a lot of capex, but I mean, are they going to make money in the future? That's what we got to wait and see. Pretty much cloud computing and AI infrastructures is the golden geese powering Microsoft explosive revenue. AI is moving into everyday work. I'm not sure if this is happening in you guys' work. I'm not sure what line of work you guys are in, but this is happening in my job. We're constantly using more experienced chatbots. I know that it's not what AI is, but it helps with customers when there are a lot of customers. We have AI to reach out to customers, etc. There's a whole bunch of things. Now, their co-pilot adoption reached over 30 million paid. That means businesses everywhere, all types of businesses, are paying extra to let AI write emails, summarize meetings, and code for them. So AI is not just a cool science experiment anymore, guys. It's a multi-billion-dollar user product making real money. Before, there was a lot of concerns as to if AI was worth it or not, and we can see by this Microsoft earnings that they definitely are, and that companies are definitely finding potential in using AI to lower their costs and make more money. Now, this is one key note here, since everyone was so worried about Microsoft capex. Their CEO said cost to outcome curve, which this means that it's making AI profitable for regular businesses. So maybe at the beginning, for a company to adopt AI is going to cost them money, but in the long run, they're going to save money, whether it is on their workforce or whatever it is, and their profits is going to be a lot more. So how much profit did they make? They made a EPS, they reported $4.81, which is up 32%. No wonder the company jumped so much. And their non-adjusted EPS was 4.74, up 23%. Pretty much what is an EPS? It tells an investor how much profit each stock means. The higher the number, the healthier, and especially if they surpass analyst expectation, it's going to have a big boost in the company like we saw before. So they did beat Wall Street expectations all across every single financial metric, which is a check mark there. Now, for the full year of 2026, they did $331 billion in revenue, which that grew for about 18%. Basically, what this is showing you is that Microsoft is growing double digits. I think they're a $1 trillion company growing double digits, which is kind of crazy. It's not the same thing to grow double digits when you have 100 million than when you have billions of dollars. And their 4-year net income was 133 billion, which the profits was about 31%. Again, what was the reason for this? Massive AI adoption, Copilot, Azure, and so forth, and their software. Now, Microsoft was one of the most beaten down stocks in the stock market when you compare it to Google or Amazon. They weren't growing as much because of the capex, even though everybody was having capex. But for the fiscal year, Microsoft was one of the most lucrative companies in history. Now, what does all this so far mean for you as a share? Well, they paid back $10.2 billion to shareholders. How did they do that? Well, one of the ways was with a dividend. Microsoft does pay you a dividend, even though it's low, it's actually growing, but they do pay you a dividend. And in total, for all the shareholders, including the dividends, they paid around $10.2 billion. Why do they do this? Well, they pretty much have so much free cash that they can hand back to investors. Why do they do this? Because you as an investor, they use your money to make more money. So they give you like they throw you a little bone. They get the whole cow, but at least you get a little bone. Usually, this is a healthy sign of companies, depending on what the payout ratio of the dividend is. But companies that have a lot of spare cash and have a great balance sheet like Microsoft tend to do this to their investors. Now, of course, there is a problem with the capex. Microsoft spent about $41 billion in capex. This is pretty much building data centers, buying chips and hardware to make their product or service even better, to potentially or hopefully make more money in the future. They do have some smart investments with the most anticipated companies that are being used right now, like Anthropic and OpenAI. They have a $3.2 billion gain from Anthropic investments, so that pretty much added to the quarter results. You got to keep that into account as well. The CEO did state that the spending plans remain disciplined and focus on long-term profitable returns. So they believe this $41 billion in the future is just going to make more money. Let's just add a plus sign here, which we have to wait and see. But with the revenue that they're reporting currently, I definitely do believe it, and I do have a trust in the management team. Again, full disclosure, I do own Microsoft. It's a small position. I'm starting to invest, so do your own due diligence. This is by no means, shape, or form me telling you to buy this company. So if you want to win this so-called AI race, you definitely have to take out the big bucks and invest in AI to hopefully be one of the winners in the future. So as we just saw before, this is a delayed after hours 9%. We saw before that it's up 16% in the past 5 days. As you can see here, it has noted at $426. Microsoft is currently at $458. One of the reasons is because, yes, Wall Street does take a look at the earnings report, and once they see that Microsoft is making money even though they have huge capex, Wall Street loves this. Therefore, the stock goes up. And this is definitely what we've been seeing. Investors, especially retail investors, they were worried about this company spending too much on AI without proof or profit. It happened to Meta. They're spending so much, they just missed on EPS and the stock is tanking. But definitely not the case for Microsoft, as they are making more money. Therefore, the stock is going up. So what does this all mean? All right, they've did $90 billion in quarterly revenue and $35 billion in net profit. Keep in mind, this is just for the quarter, and for the whole year, they have $41 billion in spending. So in 2 quarters, they pretty much could eat that up. This is one of my favorite companies. I definitely, in terms of balance sheet, is probably the best company. Maybe you could put Apple on there and Google as well. But I love Microsoft earnings. Again, their Azure crossed $100 billion in annual sales and over 30 million paid seats for the Microsoft Copilot, which is their AI tools for businesses on a day-to-day basis. Yes, they are spending a lot of money on AI and cloud servers, but they're making the money back, which is very, very, very important. Now, let's go ahead and take a look at the intrinsic value of Microsoft to see that even after those numbers, the company is worth investing in. As we can see, we have a base case. Actually, I have to check later on if this is updated with the latest quarter results. We can have a base case that the company could be worth $400, meaning that it's overvalued by 12%. If we give it a bull case scenario, the company could be worth $488 with an undervaluation of 7%. And with a bear case scenario, the company could be worth $307, being overvalued by 33%. And since they reported earnings after market close, I believe this is not updated, so I have to check back on that. I'll put a comment on the drop menu. Now, even though you're seeing this for the bull case, if you do some research and you figure out about intrinsic value, you know that people tend to recommend a margin of safety, meaning that you should buy 10 or 20% below the actual intrinsic value, so you have some cushion in case everything goes wrong. So at the current share price of 455, if you buy it below 20% of intrinsic value, that means you should be buying this company about $320, which I don't think is going to get there. Even more so now with the quarter results that they had, this company will never reach here. You also got to take into account that huge growth companies, their intrinsic value is not going to be the same, but this is a good idea to guide you of sort of what the price range is for Mike. But on the contrary to that, if we take a look at the analyst forecast, the Wall Street price targets, they have an upside of $913, an average cost of $576, 27% upside, which I think this is very realistic, and a low forecast of 404, which we were below that just yesterday before the earnings, but you missed out on the train. Again, guys, if you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you on the next video.